since this is something special, you said that this is worth really trying to hold for a bigger move, maybe switch to focusing on the weekly chart, but also knowing that if it does, start flashing some warnings and topping signs, that those would be signals to take action on.
Well, there's a lot going on with this. So let's go out to the weekly. So I developed a strategy because one of my biggest weaknesses is holding. And so, what Bill has taught us, when you have a weakness, you want to turn it into a strength. So I did a lot of work with figuring out how to hold positions, or a core position, and something I talked about at the Founders Club back in October. And thanks for letting me talk there. And so with that, that's where I developed the quicksand and the Grateful Dead exit signals. They're really the holding. And so you use the relative strength line and your relative strength moving averages. So for this one, since we look at it as an A+ stock, the leader in the market at this point in time, that I would use the weekly chart and the weekly RS line and moving averages. Let's toggle to the daily real quick. If this was more of a B or a C quality stock, or this was a stock that wasn't a special case, or you were swing trading it, you would use the same procedure that I'm going to talk about, but use it with the daily RS line with those moving averages. And can you just show them where those are and what the values are?
Exactly.
This is a little different than what I talked about in June when I was on. So I like for the 21-day and a 50-day. And so that's with the RS2. And then for the weekly, I use an 8 and a 21. So 8 weeks and 21. And this is something that I came up with. I mean, those moving averages 2 decades ago, we put it in Wanda, and I've really been using it ever since, but not necessarily in this way. So the quicksand and the Grateful Dead are the ways you hold it. So if you're in the position, you're up on the stock, and the RS line is above both of those moving averages, you're holding your core position. It does not mean that you can't trim offensively, but you want to figure out what your core position is. So let's say your max position is 25% of your account, which is huge, but your core position is 15%. You use your offensive sell signals to be trimming, maybe trimming into this like climax type of action, not a climax top, climaxy action, if you wanted to. And then, but you're holding your core position until you get a quicksand or Grateful Dead move. So the first little mark that you moved on, that you put on there, that's your quick and your quicksand. So your quick is the first time your RS line penetrates your first moving average, which in this case is your 8 week. When it comes down, you're going to sell some of that core position. So maybe you had your core at 15%, maybe you reduce it down to a 12% position. You want to take some action, because sometimes they come in and then they just bounce right off that line. But sometimes they keep going lower. So you want to have been doing something quick. And this comes from Bill's book, my favorite line, there's the quick and the dead. And that's where I came up with this. So penetrates it the first time, you sell some of your core. Goes lower than that point, which it did there because it hit it and then it went a little bit lower. That's your quicksand. Now, it bounced right back, but you don't know that. That's with hindsight. So you would have 2 sells. Your quick because it penetrated it, then your quicksand, a second sell, but you're holding that last part of your core position, maybe it's a 7.5% position, until you get your dead signal, or, because I'm a deadhead, I call it a Grateful Dead thing. You don't have to if you don't want me to like you. And so if it goes through that longer term moving average, that's where you're going to sell the rest of it. And if you look back in 2021, you can see how that played out in the end of 2021.
Mhm.
Yeah. So you had your quick where the RS line broke through your 8. Then it went a little bit lower. So you had your quicksand because those can get really bad. You can get like bogged down. But then you were holding that last little bit until it finally went through it. And again, this is only if you're up on the position and you're trying to figure out a way to hold that. Now, if you had bought that out of that last base, you would have sold it before then because you don't want to let a big winner turn into a loser. That's also in Bill's book. So you're balancing out these different rules. So to answer your question in a nutshell with this, I would hold it unless you want to do some offensive trimming into this move. But to me, it looks like it's a magnet to $1,000. Like that, it just seems like it's almost a given that it wants to hit that level, the old Livermore thing. And so we'll see how it plays out. But if you're trying to hold for, a big move and you bought this out of this base here, you're up 91% on it. So you want to try to let that run. And I'll say one last thing on this that I heard everyone say, on that run up from that base where you have the 23% power from pivot, that Bill would have been in this and it would have been his biggest position. No, Bill would not have owned this because the earnings were down. And he would not buy a stock with the earnings down, even if it was Nvidia. And so he would have waited for that first time where you had the positive year over year earnings growth when that turned up. So he would have just been, in my opinion, would have just been in this out of these bases, these recent bases. He wouldn't have been in that recovery move. That doesn't mean that's how you have to play it, but Bill was adamant if the earnings aren't there, meaning positive earnings and EPS number itself, and the last quarter, that's the C in canceling. So that was a long-winded way of saying I would hold it.